Howdy, Jacob here. Today we're looking at Alibaba. This is possibly my favorite investment right now. So again, don't do anything because I do anything. Don't do anything because anyone else does anything. Do your own analysis. Everything I say will be of my opinion, and I've already reviewed the company quite in depth. Um, it's really the e-commerce giant out in Alibaba, pretty comparable to your Amazon. But really, we got to know that a couple things. China has immense competition over there, but I do think that Alibaba has a great holding out there, and then also people undersell a lot of the investments that they make. And so I would say of all the companies I've ever researched, they're the third best company that I've researched from a capital allocation standpoint. So I've said it in previous videos. I think Tencent is by far the best capital allocator ever. And the only reason I did further research on that was when I listened to an interview with Mohnish Pabrai, and he went over the fact of basically whatever money comes in, their CEO um, their CEO wanted to spend it. He was like, what is the most like he would capital allocate different groups and what type of return they would get, and he would literally just go down the list. If they could get a 40% return, he would say, how many engineers do I have to get for you to do this? And he's like, well, maybe we could, you know, 200 engineers would help. So he's like, all right, what if I gave you 250? He's like, we can't do 250. It's too much. It wouldn't be helpful. Blah, blah. Give them 200. Then the next 25% rate of return, blah, 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 down the list. Um, and a similar capital allocator, not to that extent, but Amazon is number two in my perspective. Absolutely fantastic business and just throws money at every possible investment opportunity there is. A lot of them bust, but the ones that increase, and that's why investing is great, is that you have 100% downside and infinite upside. So a lot of their investments tanked or really didn't do much, but they definitely have a few that have popped off 10,000, a million percent. A little bit of exaggeration there, but have popped off like crazy. And so Alibaba has similar, very small investments and very mediocrely sized investments that sometimes don't get taken into consideration a lot when they do evaluation. But this initial valuation will just be based on numbers. I mean, again, I've already done deep dive here, so I'm biased in a lot of ways. But um, I mean, we do see huge declines in gross margin. That's a negative story. Huge declines in operating margin. Another very negative story. That basically means revenue is going up a lot faster than their earnings are going up. So the company's not being as efficient, which is a bummer. I mean, you want companies to be investing in their highest margin businesses so that they can become more efficient, and then the revenue only needs to go up 5 to 6% a year for you to get 10% increase on your earnings side. And then earnings per share with some share repurchases, you could be 15% a year investment for a long time horizon. But low return on invested capital recently, but historically has been in the 10 to 15% range. So again, they're definitely having a problem with their margins on the operating side, and we can see that there's quite a bit of this net interest income being negative. There's good increases in R&D, so a lot more research and development expenses, meaning that it's future growth. You're taking money away today to get future growth. And it actually has declined from 4 years ago. Sales and general admin quite a bit higher, cost of goods sold quite a bit higher. Again, they're pretty big in the e-commerce world, and everyone knows if you looked at Amazon's margins, they're very slim, or even a Walmart or whatever, margins are very slim. So you definitely want this company to be finding other ways to make money, just like Amazon's found AWS. I think that's a great possibility to endeavor into that realm. And then there's also the logistics business. I mean, that's a little bit better than e-commerce, but still not great margins. But the AI trend has a bunch, and payment platform Ant Group has a lot. So there's definitely ways to make a lot more money and to make a lot higher margins that, I mean, they are investing in today to increase those margins. But again, shares have gone up until about 3 years ago when they started to repurchase shares. And you see very recently they repurchased quite a bit of shares. Balance sheet is immensely healthy. We see $20 billion in long-term debt, $4 billion short-term debt, with $34 billion cash on hand. So they have enough cash to write off all of their interest-bearing debt. And then also they have $45 billion in short-term investments. So these are going to be those companies that they're investing in that could possibly help them out in the future. Maybe they buy them outright later. Who knows? The way the China businesses have worked recently, they're probably not going to be buying any businesses since they said they're going to, spread out their businesses. I don't remember what that's called, but spread out, 5 or 6 of their businesses into their own entities and such. But we do see free cash flow has been quite a bit better than their earnings. So huge production of free cash flow, quite a bit higher than than a couple of years ago. But again, still declining from margin. The free cash flow margin side is still declining from what it was 10 years ago. Again, mainly because their business that's grown the most has been the e-commerce. So your less margin business. But their use of cash is extraordinarily heavy on reinvestments and then more recently repurchasing shares. So the company is reinvesting. I mean, we're seeing them reinvest 80% of their free cash flow looking at the last couple of years, and then more recently buying back a lot of shares. But let's start making some assumptions here. Again, I've already done the analysis, but let's just do it live here. So $1 dividend, let's just keep it there. I don't want them to be increasing that. I like them reinvesting in possible opportunities to grow and getting higher rates of return there. And for revenue growth, I mean, we are looking at China. I think it'd be surprising to see that, like, our inflation is really 3% growth. I think that's pretty reasonable. But for China, I think it's just going to be a lot larger because on a per capita basis, everything's just so much lower than in the U.S. right now. And I think there's a lot of room to grow there. For margins, I mean, I think they can get back to some decent margins here. Let's do a wide range. I mean, I think 20 and 25% is honestly pretty reasonable. Their cash flow of $24 million last year on $130 million. That's pretty solid. But let's bring it down. Actually, let's be a little bit more conservative. So a good range because again, the free cash flow has been higher than their net income historically, but even 22%, I mean, that should be more than reasonable given the amount of investments they have outside of low margin businesses. And then a share change, I mean, 1% would be about $2 billion. And they do have quite a bit of stock-based compensation, but if they invest, let's say, if they invest half, that would be what, maybe 10, 12 billion. So let's do 4%. So that would be utilizing about 50% of their free cash flow to share repurchases, and then 50% to reinvest to get this type of return and these types of margins. And then on the terminal PE side, I mean, it's one of the best companies out there in China, but again, it is in China, so maybe 16. Let's just do market average there, and a discount rate. I mean, the same as always. Again, it just looks extraordinarily cheap, and I mean, I feel like I'm being pretty conservative here. I've already done a deep dive here. I haven't posted though, so I'll probably write down some notes that I get from the annual report, 10Qs, it's 20F. So the 20F and their quarterly reports. And just to be more confident in the results here. But I do hope you enjoy the video and have a great rest of your day. Thank you.